Mr. Ajit Gulabchand joining us right now for an exclusive chat to talk about how the business environment is changing for the infrastructure sector and how HCC stands to benefit on account of that. Of course, the most important news at hand is that the company is to receive 75% arbitrary award of 2,000 crores within the next 4 to 6 weeks. But Mr. Gulabchand, it's great to have you on the show, sir. Good afternoon from Awan and myself. Really put this in perspective. How are things shaping up at the company's end? First, with this arbitrary award win, which is expected to come on board in the next 4 to 6 weeks. And what does that mean in terms of more such arbitration, outstanding dues coming to the company in the future as well?
Well, let me say that after several representations, the government has done an extraordinary decision by taking into account the problems faced by the construction industry and the infrastructure, particularly the construction space, and its effect that it was also having on bankers who are not getting their dues back simply because most of the government clients were not paying us our arbitration awarded dues. So the cabinet then made a decision that 75% of those dues which are awarded but challenged up in the higher courts will be paid against the bank guarantee from the contractor immediately. And now that is exactly what they decided a month and a half ago. But the standard operating procedure for making this happen in a standard way across the government clients was still to be made, and that has been made now 2 days ago. So now the ball is in our court from the contracting company to produce those bank guarantees and within 7 days collect the money. Now here, where does HCC stand? HCC has already 3,400 crores worth of awards awarded in its favor. So 75% of that, approximately 2,100 crores, is what we expect in the next 4 to 6 weeks to come across, because all the guarantee limits, everything is in place. Now the process can begin. So I think this is a great relief, which brings our debt straight away down from today it is at about 5,000 crores. It comes down to 2,000 crores. So 40% reduction in debt will take place extremely soon. And this means our interest burden per year will drop by about 240 crores, which gives us, increases our margins, even at these rather stationary turnovers of about 4,000 crores from 100 to 350. So I think this augurs very well for not only HCC but for the construction industry. In addition to that, HCC has 4,800 crores worth of arbitrations that are underway just now. They are being arbitrated at this time. All arbitrations have now been moved to the new Arbitration Act, which also is something the government ordered all the clients to do, to move their arbitration under the new act, which is stricter, which has less possibilities of money being stuck, and more importantly, it is very timely. So even this, according to that new arbitration, these arbitrations should be over in 12 months, but by consent on both parties can go to 18 or can be fast-tracked to only 6 months. So when you look at that, another 4,800 crores of arbitrations should come on stream by 17-18. So I think this augurs well. All these monies that were locked up created the cash crunch for us, and also created a problem with the bankers where the borrowings had gone up more than it was necessary. So this resolves our borrowing issue considerably. So I think we have a very good positioning now. The other good news in this industry is that after a huge break of 5 years, last year has shown a substantial increase in the infrastructure spend. And from a construction industry point of view, announcements of project is good, but that takes time to come to actual construction and bids. But this has started happening, though a little skewed in favor of transportation industry. It is still coming in power, water, and several others. And HCC has increased its order backlog, which was standing at 14,000 to 21,000. And we have another 4,000 crores of orders that are lowest waiting to be converted into orders. So 50% increase in the order backlog with another 4,000 crores, making it almost 90% increase waiting in the wings. So I think there also the market for construction activities has gone up in the infrastructure space. Given this, we expect that HCC should be able to not only come back to normal, yes.
Yeah, you know, you've really painted a fairly clear picture and an optimistic one at that, but I just wanted to probe a little bit more. You spoke about the payout of about 4,800 crores in the pipeline. By when did you say you expect to get it?
See, because these arbitrations are expected to be completed within 12 months. Or maybe maximum, if we both agree, 18 months. So somewhere between 12 to 18 months, which means by the end of fiscal 18, I mean 17, 18, we should have a substantial part of this amounts coming into, if they challenge it in the courts above, in the commercial courts, which is another new thing that the Arbitration Act has created, then they will pay immediately 75% of that. If they don't wish to challenge, they'll pay 100% of that. So I think we are going to come into a lot more money if all goes as planned, and looking to the determination of the government to ensure that both the companies and the banks don't get into these stalled issues, and that they would like this to happen, and the practices by which this happened in the past also changed in order to create a smooth functioning of building this infrastructure. I think this is very good. There's one more important news that I must give you in terms of HCC, before all this happened, had sought to be part of the S4A scheme of the Reserve Bank for the bankers for this loan. This also augurs well for us because it creates a sustainable part of the loan, which is 2,600, and an unsustainable, which is 2,400. The unsustainable, about 900 of that will get converted into equity. That reduces the debt by 900 crores. And with these monies coming in from the arbitration in the next few weeks, the unsustainable portion of the debt will be completely wiped out. And then onwards, even the debt which is sustainable will be substantially brought down, and the company will be on its way to very good profitability, as well as with the ability to grow. So from having a long period of a survival strategy, we have now moved to a growth strategy. We are now in the cusp, and we hope that by the end of this fiscal year 17, we will be in a position to start growing again at a good rate, so that we can increase value for shareholders as well as increase our profitability.
Right. No, and I think the market also feels, or draws that comfort from the recent announcements that we've seen from HCC and, all the developments that are happening at the companies. And Mr. Gulabchand, you are essentially saying that by start of FY18, which is April 2017 onwards, there are higher chances with the second arbitration lot also coming in that HCC would become debt-free. About 900 crores equity infusion will be on part of the S4A process being completed. I just want to understand, what is the strategy for growth then? Because you're going to be looking at some big projects. You already have an order pipeline of 21,000. I believe 4,000 is going to come on stream as well by the closeout of this financial year. Wouldn't there be the need for more capital to actually execute these projects? So how does the growth strategy work in? If you could throw more color there.
Yeah. So in the techno-economic viability study that was based on which the S4A was sanctioned, in the sustainable part, discusses all this very clearly. A growth rate of approximately 15%, and therefore it includes capital expenditures that are required. But one thing this large period of austerity has taught us, how to remain asset light in order to deliver our projects through more subcontracting as well as by better utilization of equipment. So I think we are a leaner, better organization, which now has to migrate to a growth, but not talking of huge growth rates, because those come with their attendant problems as well. When in an economy some things might slightly slow down, or this, when that extremely steep growth rate creates a problem. So I think that has been factored into for this sanction as well. So I think we are on a very good wicket there with conservative forecasts of what we are doing, and that migrates us to about 4,500 crores, 5,000 crores turnover in 17, 18, and this goes on increasing at about 15% over the next 4 or 5 years. So I think we have now a visibility of good order book, visibility of our cash flow problems being completely sorted out, even becoming almost debt-free, to be honest.
In that very breath, sir, I'm sorry to interrupt you. In that very breath, can you talk about how much, on what kind of margins do you see that 15-20% growth in revenues, talking about 4,000, 5,000 crores in FY18, because of the ease that you get on the debt side as well as interest payments? What does that do for your profit margins?
Yeah. Straight away, as I told you, our profit margin, which is today, in spite of the high interest payments of the 600 crores, is about 100. With this, it straight away goes to 350. With more debt coming down, it goes to 450. And in addition to that, what happens is that the growth rate will also add, because our EBIT margins are around 11-12%. And when we go to 5,000 crore turnover, we get a EBIT of almost 600 crores. So what we are really looking at here is the growth will also add to the bottom line, not just to the top line. Usually our EBITs are around 12%, but whenever the claims start coming in, because of the way provisioning is made, we get additional profitability, and the EBIT rises to almost 19%. So this story will continue, and we hope that after this big backlog of claims has been recovered, and don't forget, after all this happens, the 25% that will not be paid will also start coming in.
Right.
And that's also a large amount.
Yeah, it is. And Mr. Gulabchand, so much to ask you, with respect to what is now going to be the revised promoter holding, what plans have the lenders communicated to you in terms of growth?
In terms of?
Growth.
Lenders communicated what? In terms of?
Just, what I wanted to understand from
growth. No, this is what they have sanctioned. The
so
S4A is sanctioned by the bank.
What will be the revised promoter holding?
I just told you, will be about 27%.
Okay. And you touched upon the government and the kind of thrust towards infrastructure. I just wanted to understand from you, what is it more that you would like to see? And do you think that for HCC in particular, the revenue pie will definitely be focused on the transport sector, given that the order book looks very strong here?
It will be in all three sectors as I see it. Transport, which includes roads as well as metros. Then the railways are still to start looking for new things to happen. But they will also come into the market for getting their projects done. There will be hydroelectric projects coming up because this constitutes green energy. At the same time, there will be several other water projects that will come up, water pipelines that for irrigation as well as for cities. So I think overall the infrastructure, well, it won't go back immediately to the boom days, but it has started moving towards that. So in another 3-4 years, you will have a very healthy growth of infrastructure spent by government in Delhi as well as by the state governments.
Mr. Gulabchand, great to have you, sir, on the show to clarify and outline the growth path for the business going forward from here. There's been so much news flow that has worked for HCC, especially in terms of order wins coming in over the last 6 months, and now with the problem on the debt side also being solved. Analysts are looking at the story favorably. But thanks very much once again for your time. Really appreciate your insights.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at @ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.